Good afternoon, members. I request our MC member, CP Jain, to escort our speaker for the day onto the dais and welcome him with a floral bouquet. I take this opportunity to introduce our speaker of the day, CA Prakash Hegde. Prakash Hegde, sir, graduated BCom and also is an LLB graduate. He is a university topper in BCom as well as LLB. He secured the first rank in LLB. He also holds a MBA degree from IGNOU. Sir worked as an advocate in his starting of his career. Then he was also the CEO of Totgara's Cooperative Sales Society, Sirsi, for 6 years. Later, he worked with PwC for 10 years. Later, he also was the director of Deloitte, Bangalore, and specialized in international taxation. Prakash sir has advised many leading cooperative societies. He is a well-known speaker and has conducted many seminars and sessions. He has authored many articles which have been published in Business Lines, Financial Express, Business Standard, Economic Times, and Taxman. He has appeared before the tribunal for various cases. I welcome you, sir, and I hand over the session to you.
Good evening, everybody. Hope everybody had the coffee and tea. Energy is missing in the room. Good evening. So we are about to discuss one of the interesting topics with regard to cooperative societies, income tax matters. Basically, the income tax matter with regard to society is put in just 1 or 2 sections. But there are so many case laws and judicial rulings that each day the law keeps on changing. So you have to keep yourself abreast with regard to the legal changes. Let us discuss some of the key aspects here. So the time allotted is 1 hour. Thank you. I have divided the agenda into 6 main categories. One is background. Second one is types of cooperative societies, how we need to view each one of them with regard to the compliance from the income tax perspective, provisions of the Act, the various issues, basic suggestions with regard to assessments and appeals, and your questions. Let us take up the first part. I have divided the presentation into 2 parts mainly. One is for the beginners, basics, and the second part is for the experts like you, the various issues with regard to income tax matters. So let us start with the basics first. If I have to put all the provisions in simple terms, we can say that most of the general provisions of the Income Tax Act are applicable to cooperative societies. There are some specific provisions which are specifically given for the purpose of compliance from the cooperative from the income tax perspective for the cooperative societies. Further, income of a cooperative society fulfilling specified conditions will be eligible for deduction from gross total income under Section 80P of the Income Tax Act. Deduction shall not apply in relation to any cooperative bank. So cooperative society is eligible for deduction from gross total income and can enjoy a tax-free situation, but cooperative bank is not allowed. Let us have a look at the types of cooperative societies. Are you comfortable in English or Kannada? How do you? English is better? Okay. So I have divided the categories into 2 parts by registration, by function. By registration, the common types of societies are Central Act, Karnataka Cooperative Societies Act, and Karnataka Savartha Sahakari Act. Each one of them has significance. By function, we can divide the societies into several types. The major ones I can list down as Primary Agricultural Credit Cooperative Society, Agricultural and Rural Development Bank, Credit Cooperative Society, Marketing Cooperative, Multipurpose Cooperative, Banking, Housing, Milk. Again, there could be several other types, Vegetable Society or Water Resource Society. There are many other types. These are the major societies, what we find normally. Now, moving to the specific provisions in the Income Tax Act, let us have a look at the applicability to different situations. First part I need to mention, under the Income Tax Act, there is a provision which has been brought into force with effect from assessment year 2018-19. What it says is, no deduction under section 80H to 80TT is available unless the income tax return is filed within the due date specified in section 139(1). So it has to be filed within that given due date. What is the normal due date for the income tax return filing for a cooperative society? In any case, a cooperative society has to get its account audited. Okay, not necessarily that income tax audit is required in all cases, but it has to get its account audited by a chartered accountant or by the cooperative auditors within the given due date, 31st August. The due date for filing the return when audit is applicable in all types of assessees cases, 31st October. So 31st October is the due date for filing of the income tax return of a cooperative society in a given in the usual year. But for the last years, the government has changed the due dates and it has extended up to 15th February also. So you need to make sure that the tax return gets filed by the given due date under section 139(1). If the society files the tax return by the end of the assessment year or say under 139(4), then it is not permitted to get the deduction. In many of the cases, we are seeing that the societies did not file the income tax returns for a simple reason that society is anyway exempt under the income tax law. Many of those societies are getting the notices under section 148 now for explanation and for proper compliance. But in all those cases, it's going to be quite challenging to get the deduction under section 80P, which otherwise is eligible. Now, moving to section 80P2A, I'm just giving you the basics. The whole of the profit and gains of business attributable to the following activities shall be given as a deduction from the gross total income of a cooperative society. What are they? Income from carrying on the business of banking or providing credit facilities. Banking is a term which has been loosely used here. In a different clause to section 80P, they say that the deduction under section 80P is not available in relation to a bank, but here it says banking and providing credit facilities. So please ignore the word banking, which is appearing in the income tax provision 80P2A, because specifically there is an exclusion subsequently. Concentrate only on providing credit facilities. So if a society is providing credit facilities, it is eligible for deduction under section 80P. It should be to only the members. If the facility is provided to others, deduction is not available. Income or profit and gains of cottage industry is allowable as a deduction. Then the income from marketing of agricultural produces grown by its members. Please mark the words which have been highlighted here. If the producers are grown not by the members, but by somebody else, and say another member has purchased and he has sold it in a cooperative society, the deduction is not available. So for the purpose of income tax audit, You need to keep in mind all these aspects, and also where the income tax audit is not applicable, while filing the income tax return, these are the aspects that you need to focus upon. Otherwise, at the time of the income tax assessment, you may not be able to prove all these conditions and you will not be eligible for the deduction. The next clause is profits are gained from purchase of agricultural implements, seeds, livestock, or other articles intended for agriculture for the purpose of supplying them to its members. Next, processing of agricultural produce of its members without the aid of power. Next, collective disposal of labor of its members, fishing and allied activities. These are all the activities which are eligible for deduction under section 80P 2A. Let us have a look at section 80P 2B. Here, the deduction is available to a cooperative society engaged in supplying milk, oilseeds, fruits or vegetables raised or grown by its members to a federal cooperative society. Say, for example, if there is a milk society and it collects the milk from its members and sells it to some outsiders, then it is not eligible for the deduction. But if the milk goes to a federal society, say KMF, then the deduction is available. Similarly, it should be given to the government or a local body or a government company or a corporation. These are all the conditions which have to be fulfilled in the case of a society supplying milk, oilseeds, fruits or vegetables. And here also, milk, oilseeds, fruits and vegetables should be raised or grown by its members, not otherwise. It's not available for people who trade. It's available only for members who raise or grow. Next part, section 80P2C, it's the general clause. The deduction under section 80P2C is available for all types of societies. If it is a consumers cooperative society, deduction of 1 lakh rupees allowable. For any other society, 50,000 rupees available. It's available across the board. Whatever be the activity the society has been carrying out, whatever be its eligibility, this deduction is available. In some of the cases, we come across situations where the tax officers are not aware of this provision and they don't give the deduction. You have the right to claim the deduction under section 80P2C. Next part is 80P2D. Here, income by way of interest or dividends derived by a cooperative society from its investment with any other cooperative society is eligible for deduction. See the underlined words, interest or dividends received, derived from any other cooperative society. If it is received from a company, if it is received from a cooperative bank, this deduction is not available. We will get into the discussions later, but it would be sufficient if you now note all these highlighted words. Deduction under section 80P2E, income from letting of godowns or warehouses. Section 80P3 restricts the deduction only under one section. There are situations where deduction may be available under section 80P as well as, for example, under section 80HH, etc. But deduction under only one of the provisions is permissible. The next part is with regard to section 80P4, which discusses that the provisions of this section shall not apply in relation to any cooperative bank other than a primary agricultural credit society or a primary cooperative agricultural and rural development bank. Here, this provision has been brought into force from 2007. Until then, the cooperative banks were enjoying the deduction under section 80P. From then, the restriction has been placed. That's the reason I told you in the previous provision that interest and dividend received from a cooperative bank is also restricted. Income of the cooperative bank is also not eligible for deduction. One more basic provision. This is not directly connected to deduction, but it's related to TDS on interest other than interest on securities in the context of a cooperative society. A cooperative society is not required to deduct TDS while making the payment to the members by way of interest or dividend. But the interest, other than interest on securities, is subject to TDS if the turnover of the cooperative society in the earlier financial year was 50 crore or more, and the annual interest which is being paid to the member is 40,000 rupees per financial year. The amount will be increased to 50,000 in the case of the senior citizens. So generally the cooperative society is not required to deduct the TDS. Only bigger cooperatives where the turnover, total sales or gross receipts exceed 50 crore in the previous financial year, such societies have to comply with this provision. This has come into force from 2019. It's a recent provision. So remember that the cooperative societies comply with the TDS provisions while making the payment of interest if it's a bigger society. TDS rate is 10%. The term total sales, gross receipt or turnover have not been defined. So you have to go to the guidance note of the CA Institute with regard to tax audit to understand what is the meaning of sales, total gross receipts or turnover. One more basic provision is with regard to TDS on payment of cash, which have to be complied by a bank or a post office. It is not applicable for a cooperative society. It's applicable for a bank. A bank may be a commercial bank or a cooperative bank, or it's applicable for a post office society. Why we thought of discussing this is many of the cooperative societies are getting hit by this specific provision, which again has come into force from 2019. This provision says that in case the cash withdrawal of any assessee, it may be individual, firm, company or cooperative society, if the cash withdrawal of such assessee for the entire year is exceeding 1 crore, then the bank or post office will have to deduct TDS at 2% of the amount exceeding 1 crore. And in case of an assessee who has not filed the tax return for the last 3 years, the TDS rate of 2% will be applicable at the threshold of 20 lakh itself, and 5% shall be applicable for withdrawal exceeding 1 crore. Is it clear? Here, there was some confusion with regard to assessees which have not filed the tax return for the last 3 years. The CBDT has clarified that if the return is not filed for all the 3 years, then only the higher TDS rate will be applicable. If the if the income tax return has been filed for at least one of the years, then the higher rate of TDS is not applicable. No, that 20 lakh limit is also applicable if 3 years returns are not filed, not otherwise. Now, let us go to the next level to understand certain practical aspects. There are few issues what we have noticed with regard to filing of the income tax returns, which we keep on discussing. So I have highlighted some of them. One is with regard to Savarda Cooperative. The other one is with regard to interest received from commercial banks. The third one is interest received from cooperative banks, nominal members, associate members, filing return by due date, deduction for expenses, mutuality, unexplained cash credit, demonetization deposits. These are the 10 things what I have listed down. Let us take up one after the other. The first one is with regard to Savarda Cooperative. As we discussed, under the Karnataka jurisdiction, we come across mainly 3 types of cooperative societies. One is registered under the Central Act. The second one is under the Karnataka Cooperative Societies Act, and the third one is under the Savarda Societies Act. From the time of the registration of the Savarda societies way back, I think it started in 2002 or 2003, these, however, the societies were under the impression that they are eligible for ATP deduction, and that notion continued for a long time. Very recently, about 4 years ago, before the Income Tax Appellate Tribunal, in the case of Udaya Savarda Cooperative Society, an issue came up before the bench saying that Savarda Society is not a cooperative society, it is only a cooperative, because the term society is not used. ATP deduction is available only if the term society is used. So cooperative society is entitled for the deduction under section ATP. Cooperative is not a society, not eligible for ATP deduction. So that debate went on. And when we refer to the Income Tax Act, there also it is not clear. It says cooperative society registered under the Cooperative Societies Act 1912 or under any other law for the time being in force in any state for registration of cooperative societies. There also the term societies has been used, but Savarda does not use the word society. So this dispute came. Anyway, now the matter is settled. The tribunal had referred the matter back to the assessing officer to reconsider whether it can be treated as a cooperative society or not. Later, in the case of Swabhimani Savarda, the cooperative society and the federation went to the High Court and got a relief there. The High Court ruled that Savarda is also a cooperative society eligible for ATP deduction. And later, the matter traveled to the divisional bench, I think in 2021. There also divisional bench has held that Savarda Cooperative Society is very much entitled for ATP deduction. So the matter is almost coming to an end. Perhaps the income tax authorities may go to the Supreme Court. Let's wait and watch. But until now, at least until now, the matter is in the favor of the assessee. The logic given by the High Court while giving the decision is the spirit of cooperation movement should be recognized. The statement of objects and reasons while enacting the Savarda Act has to be seen. Absence of the word society is not detrimental. So these were the observations of the High Court of Karnataka. Now, let us come to the second part. Whether interest received from banks is income from business or income from other sources. There have been disputes. Many of the credit cooperative societies have been depositing the money with commercial banks and interest is being received. And blindly, in many of the cases, ATP deduction is claimed under section ATP 2A1, saying that it's income from or profits or gains from carrying out the by providing the credit facilities to the members. In a way, if we say it from a generous perspective, if you have to look into the matter, it is definitely by providing credit facilities to the members, because the society collects the money from the various members, it deposits into certain commercial banks, it earns the interest. Out of the earned interest, it earns the profit, and from that profit, it distributes the dividend. So in a way, it's an activity which can be attributed to the activity of carrying on the credit facilities. But this matter came up before the Supreme Court in 2010 in the matter of Totkar's Cooperative Society. There, this in the Totkar Society matter, the Supreme Court looked into all the aspects and it analyzed the situation. Totkar's Cooperative Society is a society which is into the marketing of agricultural produces of its members. While it markets the agricultural produces of its members, some of the surplus money which is not withdrawn by the members, that remained with the cooperative society. That money which was belonging to the members was deposited by the society into commercial banks. And those commercial banks gave the interest to the society. That interest was earned out of this deposit with the commercial bank. Supreme Court told that in such a situation, the money did not belong to the society. The money actually belonged to the members who did not withdraw the amount which was belonging to them, which lied in their account. So such interest which has not been withdrawn by the members is a liability to the society. Interest earned out of such a liability should come under the head income from other sources and not under that income from business. If it comes under the head income from business, it is a favorable situation for the society, it could have claimed ATP deduction. But since it did not come under the head income from income from business, ATP deduction is not allowable. If it comes under the head income from other sources, the only deduction that is available is deduction for expenses under section 57. Otherwise, no deduction is available. This matter was discussed by the Supreme Court. This matter was discussed again in the case of Tumkur Merchant Savarda Credit Cooperative Society. In this case, the situation of Totkas didn't, the Totkas situation was discussed, but it was actually analyzed by the High Court, which told that the situation of Totkas was different because in the case of Totkas, money belonging to the members was lying with the society. That money was invested. But in the case of Tumkur Merchant Savarda, the money belonged to the society itself. It did not belong to the members. Out of the society's reserves, share capital and other funds, it has invested certain amount with the commercial banks. Therefore, Totkar's ruling is not applicable in this situation. The society is entitled for ATP deduction, was the ruling given by the High Court of Karnataka. Any questions so far? In the Supreme Court, we don't have any favorable case law for this. The Totkas is the Supreme Court decision and it's adverse. See,
plus earned from commercial bank, incidental to the income of my,
see if you ask, earlier when I started with the in the beginning of the discussion, I started the income is attributable to any of the activities. Attributable to is a wide word. It is not necessary that it has to come specifically from this source. When you say attributable to, all activities which are around that particular activity get covered. So from that perspective, if the interest has been earned by a cooperative society from commercial banks, in particular in the case of credit cooperative societies, I am of the view that deduction should be available, and we need to highlight the word attributable. There is a distinction which has been drawn by the courts between the term attributable and derived from. Derived from is very restrictive. It says when you say it's derived from only from this activity, this is the amount which has been received. But when you say attributable to, it's all surrounding activities which get covered. So from that perspective, deduction should be allowed. But at the moment, in most of the cases, the tribunals are not granting the deduction. And in most of the cases, rather, they are referring the matter back to the assessing officer for re-examination to check whether this Supreme Court decision in the case of Totkars is applicable or Tumkur Merchants is applicable. Because Totkars case is applicable where the money does not belong to the society. Tumkur's Merchant case is applicable where the money belongs to the society. So to find out the facts, they are referring the matter back to the assessing officer. And none of the cases have traveled to Supreme Court so far on this particular aspect. No, on this matter it has not gone.
And for rest of the societies, I mean, the credit cooperative society is better to apply Tumkur Merchants Cooperative law.
No, you cannot generalize like that. You have to check the balance sheet of each of the societies. You have to analyze the balance sheet to find out whether the amount which has been deposited into the commercial banks is out of the reserve fund and the other reserves and share capital of the cooperative society versus the funds which have been borrowed from the members or others. And it's quite a difficult exercise. Let me tell you, you will not draw a cash flow chart every day, right? you will not be able to say that this is the money I received by a way of deposits from member A, member B, member C, and this is the amount I have deposited into commercial bank X, Y, Z. It is not possible. So generally, it is the tax officers, if they analyze the details, they don't allow the deduction, and it is not possible to prove that this is the money which has been utilized for the purpose of deposits. So coming back to your question, you cannot generalize between the marketing societies versus the credit societies. You have to go by the principle which says that whether the money belongs to the society or to others. Based on that, you have to take a call.
Now, one more argument is there. If there is a statutory requirements of depositing some amount in some deposits or something like that, then for example, general reserve, or in case of Sovarda cooperatives, they need to deposit 20% of the deposits received into the deposit account.
Yeah.
So, does it meet statutory requirements? Then it is a part and parcel of activity. That's why it qualifies for ATP A1.
Yes, I agree. If you refer to section 58 and rule 23, right? There is a specific provision that the reserve fund has to be deposited into these modes. And also there are certain directors circulars which say that so much reserve have to be maintained. So for that purposes, if you are maintaining a balance with the bank, and if you have earned interest, then it should be entitled for deduction under section ATP to A1, no doubt about that. There is a decision of the Bangalore tribunal also. It should be a business income in such cases. There is a Bangalore tribunal also in the case of Chitradurga, some cooperative society. I can give you the citation. There is a decision already on this matter. You can show that some of the officers agree, some don't agree, some are so rigid that they will ask you to prove that this is the fund which has been utilized for that given purpose. I can give you one classic case law. Recently, in the case of South Indian Bank, the Supreme Court delivered a decision which said that in a different context, and I think under section 14A and rule 8, the decision came. In that context, the Supreme Court says that the assessee is the right person to say that which money has been utilized for which purpose. And assessee cannot be asked to prove that this is the source of the money if there are mixed nature of funds. If some funds are borrowed and some funds belong to the assessee, then assessee has to say that whether this is out of the own funds or this is out of the borrowed funds. And that discretion has to be given. Based on that, the tax officers will have to tax the assessee. That's a decision of the Supreme Court in the case of South Indian Bank. I think that was pronounced sometime in November or December 2021. That's a landmark decision. We can refer that case law to our cases, perhaps. It's too difficult to convince them. It is not possible to convince them. Yes.
That said means.
Sorry.
They gave the answer.
Faceless assessment scheme is going on now, and there are no personal hearings. You don't know who is the person who will be handling the income tax matters. He will be sitting somewhere in the other part of the country and he will be assessing it. You will not even come to know his address and details. Everything will be online. All right. With regard to?
Banks, nationalized bank, nationalized
No.
banks.
No.
So I got one negative order stating that investment in bank is not eligible under ATP2.
Yeah, that has been the normal stand as of now.
Yes, first time I got, sir.
Yeah, see whether in the appeal, you can say that the investment has been made as a business necessity, as reserve fund, not as a general investment, as a reserve fund or any other specific requirement under the directions of the director. if you can bring in, perhaps you can get some relief. The next part is interest received from cooperative banks. Whether a cooperative bank is a cooperative society is the basic question, which the judges are also divided. The divisional bench of Karnataka High Court, Dharwad bench, in 2017 January took a view that cooperative bank is a bank as well as a society. I have given that Venn diagram there. So it fulfills all the conditions of a society. Basically, it has to be a society, then it has to become a bank. And therefore, the interest which has been received from a cooperative bank is eligible for ATP deduction. That was the decision in the case of Totkar society again. For the same society, under the same circumstances, facts remained the same, year was changed. Instead of assessment year 7-8, I think in assessment year 11-12 and 12-13, the same bench, but the judges were different. They took a view that cooperative bank is not a cooperative society as far as income tax law is concerned. For basic principles, you may say that cooperative bank is a cooperative society, but for the purpose of income tax law, there has been a distinction which has been made between a cooperative society and a cooperative bank. Therefore, any interest which has been earned from a cooperative bank is not entitled for deduction under section ATP 2D. That has been the decision, and this has been the law for a while now, from 2017 June. It's already 5 years. The matter is pending before the Supreme Court, but until now, all the case laws are going against us before the tribunal as well as before the High Court. Supreme Court has to decide, sir. Contention is interest earned from commercial banks anyway depends on the nature of the activities of the society. If it is a credit cooperative society, I am firmly of the view that it should be eligible for deduction under section ATP, because that's an income which is attributable to the activity of carrying on providing the credit facilities to the members. Okay. With regard to the interest which is received from a cooperative bank, that should also be eligible in the case of all the cooperative societies, because to qualify to be a cooperative bank, it has to be a cooperative society first. Unless you register the cooperative society, you cannot form a cooperative bank. Therefore, ATP deduction should be available in the case of interest received from cooperative banks, irrespective of the nature of activity of the societies. But in the case of interest from commercial banks, the nature of the activity of the society has to be seen. Yeah. Correct. Yes. It should be allowed. But here we will have to wait for some 15 to 20 years for each matter to travel to the Supreme Court, and the law becomes final, and then the amendment will be made, nullifying the effect of the Supreme Court decision. Everything will, yeah. The next aspect of discussion is nominal members. In many of the provisions in the income tax law, we saw that the deduction is available if the business is carried out with the members, if the money is given to the members, or carrying on the credit facilities with the members, etc. Right? So, what is a member? Who is a member? Is the definition given? It's not provided in the income tax law. So, in this regard, there have been a lot of litigation. Section 194A made that cooperative banks to deduct the TDS for the amount which is payable by way of interest to the members I think in 2002 or 2001. At that time, the CBDT issued a circular stating that a member means a person who has contributed to the share capital of the society, and associate or sympathetic member or nominal members are not the members in the true sense, is the summary of the circular 9/2002. This circular was challenged before the Bombay High Court in the case of Jalgaon District Central Cooperative Bank. And the Bombay High Court told that the law has not defined, the income tax law has not defined who is a member and what is the definition of a member. So the CBDT, by way of a circular, cannot restrict the meaning of a member to say that only share members are the members of the society. Therefore, it quashed the CBDT circular. In the case of Citizens Cooperative Society, Supreme Court had to deal with the term nominal members. There, the Supreme Court told that a nominal member in the context of Citizen Cooperative Society is not a real member. Please understand, in the context of Citizens Cooperative Society, a nominal member is not a member, because Citizens Cooperative Society is registered under Andhra Pradesh Mutually Aided Cooperative Societies Act, MCS Act. Under the MCS Act, there is no concept of nominal membership. There was only one concept of membership, which was share member. Therefore, this Supreme Court told that when this law itself, the Mutually Aided Cooperative Societies law itself, does not define who is a nominal member, and there is no option for a society to enroll a person as a nominal member, if the society has enrolled the member as nominal member, then he is not a member at all. And therefore, the business activity which has been carried out by the society dealing with these non-members is not allowable for deduction under Section 80P, because the society has gone beyond the provisions of the law under which it is covered. Again, in the case of Mobilized Service Cooperative Society, which is a society registered under the Kerala Cooperative Societies Act, the Supreme Court had to deal with the term nominal members. Here, under the Kerala Cooperative Societies Act, there is a specific provision for nominal members. The law itself permits, which the Kerala Societies Act is similar to Karnataka Cooperative Societies Act. There is associate member, there is nominal member, and there is share member. So the Supreme Court told that when the local law says that nominal member has to be considered for the purpose of membership, then the transaction with such person, such nominal member, is valid, and the deduction under Section 80P is allowable. And presently we are following that. Therefore, as far as Karnataka is concerned, nominal member, associate member, and share members will have to be considered as members under the Karnataka Cooperative Societies Act. Interestingly, under the Savarda Cooperative Societies Act, there is the definition of member does not cover associate member. It covers only share members and nominal members. You can see the definitions here. I'll read out. Under the Karnataka Cooperative Societies Act, member means a person joining in the application for the registration of a cooperative society, and a person admitted to membership after such registration in accordance with this act, the rules and the bylaws, and includes a nominal member and an associate member. In the case of Karnataka Savarda Sahakari Act, member means a person who has contributed towards the share capital of a cooperative before its registration, and includes a person admitted to membership after such registration in accordance with the act, rules and the bylaws, and includes a nominal member. In fact, the term associate member was there till 2013. In 2013, they have deleted that term associate member from the Karnataka Savarda Sahakari Act. Therefore, in the case Karnataka Savarda Sahakari Act is dealing with associate members, you have to be cautious. The Societies Act, the activities of the societies may be considered to be beyond the eligible deduction under Section 80P. But if you see Section 2 of the Savarda Sahakari Act, definition of member is given like this only. If If you refer section 21 of Karnataka Savarda Sahakari Act, associate members are very well included in for the purpose of activities. So Savarda Sahakari Act itself allows under section 21. But if you refer to section 2 of the Act, members definition is given. In the member definition, word associate member is missing. Yes. Yes, please. Associate members. Under the Karnataka Cooperative Societies Act, you can have associate members, but under section 18 of the Karnataka Cooperative Societies Act, the number of members, number of associate members cannot exceed 15% of the total regular membership. So what happens if it exceeds 15% of the total regular membership? There are few decisions of the Income Tax Tribunal, Bangalore, which say that in case the membership of associate members has crossed 15% of the regular membership, the society is not entitled for ATP deduction. The whole amount has to be considered as taxable. The famous decision is that of Atma Shakti Multipurpose Cooperative Society, October 2019.
That's why the income generated with the associate members qualifies for deduction.
No, the
other members who are in excess of 15%, they are inactive. They did not, I have not accepted deposits. I have neither lent loans. That's why they were inactive. You consider only 15% or less than 15% with whom I have done the business. The matter for income tax is very important from the point of view of generation of income. Who have generated the income only 15% or below the 15% of the regular members. So can I put forth that argument?
The logic given in Atma Shakti Multipurpose Cooperative Society, the logic given by the Income Tax Appellate Tribunal in Bangalore is not from the perspective of the income, not from the perspective of how much income has been generated from the regular members or how much has been generated from the associate members. It is from the principle of violation of the law itself. Once the society has violated the law, the society is not entitled for the deduction. That is the logic. In the subsequent decisions also, Kanakadasa Pattina Sahakari Sangha, Parvati Parameshwara Pattina Sahakar Sangha, January 2021, in all those decisions also, this has been the subject matter of discussion. Filing return by due date. At the beginning of the discussion, I mentioned that filing the return by the due date under section 139(1) is very essential. In case you miss the deadline, as of now, we don't have any remedy. The matter may soon travel to the various judicial forums. Perhaps one of the arguments which you can make is ATP deduction is a substantive provision which is enacted for the purpose of giving benefit to the societies, cooperative societies. And by way of implementing or enacting another clause which is purely technical, the benefit which is given to the cooperative society should not be withdrawn. Because if you don't file it, say by October 31st, you file it, say by 15th November, it's only a technical violation. The government is not going to lose by delaying filing of the tax return, right? That's one of the arguments you can take up. Perhaps only the high courts will have to decide this matter subsequently. Next question is with regard to deduction of expenses under section 57. We discussed now that in case you have earned income from other sources, the only option available for you is deduction for expenses under section 57. Even here, there are few hurdles. Section 57(3) allows deduction for expenditure expended wholly and exclusively for earning that income. Say if you have earned some amount of interest from a particular bank, And if it is coming under that income from other sources, you should be able to justify that the particular expenditure has been incurred wholly and exclusively for earning that income. Say the managers, secretary, staff are working in a cooperative society and they have spent enough time in negotiating with the bank for a higher rate of interest, and because of that they have earned a good amount of interest from a bank. How will you be able to justify that the salary of the manager, secretary and staff, at least a part of it, relates to or it is spent wholly and exclusively for earning that income? It is not possible. Practically, it's a challenge what we are facing. Theoretically, it is possible, but practically, we are not able to get much of deductions. And also, in case some amount has been borrowed from some outsiders or by way of deposits, you should be able to justify that the same amount has been deposited elsewhere for the purpose of earning interest. And then only they will give you the deduction for the whole and exclusive activity which has been carried out and which has been spent. In 2015, in the case of Todgar's Cooperative Society, the Karnataka High Court has held that the administrative expenses which are covered under section 57(3) can be claimed by way of a deduction. For this cooperative society, for the Todgar's Cooperative Society, in a couple of years they allowed the deduction, but of late they are denying the deduction, saying that the activities cannot be exactly, the nexus cannot be shown, it is not possible to show the exact nexus, and therefore the deduction is not available. Proper segmental accounting and documentation have to be maintained and produced to get the deduction. Mutuality principle. Generally, in the income tax law, mutuality principle is applicable only in very rare situations. In some of the cooperative societies matter, this has been discussed. In the case of Cochin ITAT, while it was dealing with one of the societies matters, Hindalco Employees Cooperative Society in 2014, in the context of 269 SS, the Cochin ITAT told that mutuality principle is not applicable for a general cooperative society. In the case of Sindh Cooperative Society, Housing Society in 2009, Bombay High Court applied the mutuality principle and told that whatever the activities that have been carried out by a housing cooperative society or a say resident welfare association, that comes under the head mutuality, and therefore there is no income which can be offered to tax. Mutuality basically means the a team of people or a group of people working amongst themselves for their mutual benefit and contributing some money for that purpose. If there is any surplus, such amount is not taxable. Such principle is not available generally. Unexplained cash credit. Perhaps this one and deposits during the demonetization period can be covered together. In many of the cases, during the demonetization period, the cooperative societies have collected the cash from the members and they have deposited with cooperative banks or some other banks. And the claim of the cooperative societies has been that at the time of assessment, the details of all the members, the money received, the PAN, all the details have been given to the income tax assessing officers. And it is not unclaimed, sorry, it is not unexplained cash credit. It's a very well explained cash credit, and there is no benefit which has been flown out to the society or to some other party because of this transaction. Say, for example, if 10 lakh has been collected from a member in old currency, 10 lakh has been given as a credit in the account of that particular member. But society has not benefited. It's only for the benefit of the members it has done the activity. But the income tax officers, in most of the cases, they took a view that the currency had no value. If 10 lakh has been collected with society, at the time of collection, that money had no value because it was demonetized. And the society has credited the amount to the account of the member. Therefore, it is unexplained cash credit. And several orders have been passed subsequently. Recently, in the case of Bhagirath Pattina Sahakar Sangha Niyamita, February 2022, that's just about 3 months ago, the Income Tax Appellate Tribunal had to deal with this situation. It took a view, the tribunal took a view that it is not unexplained cash credit. The cash credit has been very well explained by the society by way of production of all the books, accounts, and the details of the members who have given the cash. Therefore, the addition should not be made. Perhaps this is one of the landmark decisions. Based on this decision, we are hoping for some more favorable decisions from the tribunal and the high courts. They had, as per the details of the order, they had given the name, address, PAN number, and the currency denomination, and the membership identification details of all the members. These were given to the assessing officers. I think it may be overall. Per member might not have been done. Another justification which they had was from in 2016, from 14th of November 2016, the demonetization happened on 8th November 2016. For the first 6 days they accepted. Later they stopped accepting because the Reserve Bank of India made it clear that cooperative banks should not accept the cash. This is not a cooperative bank, but it's a cooperative society. But from 14th November 2016, it stopped collecting the cash. So that justification was also given. Yes. And in any other case, going back to my previous slide, there is one decision of yeah. Okay. Perhaps in the appeal, you will definitely get a favorable order. There is a general decision in the context of section 68. I'll just read out from this slide, from the previous slide. You can perhaps argue assessee society does not have any other activity other than catering to the needs of the members, and therefore the addition under section 68, 69 or 69A or 69B has to be treated as income from business only. Once it is considered as income from business, deduction under section 80P should be allowed and section 115 BBE should not be applied. And this has been decided in a different context by Pune Tribunal in the case of Aman Chote Vyapari Sahakari Path Sanstha in 2017. This is also one of the decisions perhaps you can refer as a general safeguard. Any questions? Yes. In many of the cases, they are reopened. Yes. In some of the five minutes. All right, we are almost at the fag end of the discussion. The next point is just basic suggestions. With regard to assessment, that's the foundation and the best opportunity to give all the possible alternative arguments and submit the documentary evidence. There are certain restrictions for providing additional evidence at the time of appeal before the Commission of Income Tax and Tribunal. So while giving any documents or the alternative arguments at the assessment stage, please be liberal and give as many details as possible. As available as possible also. Okay, any more questions?
We have few questions online.
That's a very dicey question. I touched upon that question right now. In the case of Hindalco Employees Cooperative Society, Cochin ITIT in 2017 had to deal with this issue. The argument of the society was cooperative society is a mutual concern. Say, for example, as I mentioned, it's a group of people dealing with themselves for the mutual benefit. Therefore, if the cooperative society collects any deposits by way of cash or other than through the given modes, then it should not be considered as acceptance of deposits. But the tribunal did not agree to that view. It was of the view that a cooperative society does not get covered under the mutuality principle. And if you accept any deposit, whether into SP account or deposits by way of cash or any other modes, then definitely 269 SS or T would be applicable and penalty would be leviable.
We have a question online which asks us to discuss about the mutuality concept laid down by the Supreme Court with respect to Karnataka.
Mutuality,
Regular, nominal, and associate. Cooperative societies are having regular, nominal, associate members. Considering the concept of mutual concept laid down in the Honorable Supreme Court, in case of Citizens Cooperative Society, assessing officers are disallowing the income under Section 80P2 of the IT Act. Please discuss with reference to the Karnataka.
Okay. See, in the case of Citizens Cooperative Society, basically the Supreme Court told that the principles of mutually aided cooperative societies under which that particular society, citizen society, was registered was not followed. Mutuality was an alternative argument which was taken up by the council for the society. What the council told was, even if it doesn't get covered on Section 80P, give us the benefit under mutuality. The Supreme Court told that when the basic principle itself is not fulfilled under the Mutually Aided Cooperative Societies Act, there is no question of giving you the benefit. It did not discuss the mutuality principle in detail. In brief, it just told that mutuality concept is not applicable in this situation because the concept was not applicable at all. First of all, it had dealt with a set of people who were not the members. Those people were called as nominal members and they could not become the nominal members as per the law. But they were called nominal members and the transactions were made with those people and profit was earned. Therefore, in the context of Karnataka jurisdiction, mutuality concept will not hold good to claim a benefit for a cooperative society. You will have to claim under ATP only. ATP and mutuality are independent. Mutuality is applicable mainly in the case of Resident Welfare Association or housing cooperative societies, whereas ATP is applicable for all cooperative societies. So if your case is that of a housing cooperative society, perhaps you can say that mutuality principle is applicable, but not otherwise. With regard to the argument that has to be made before the assessing officer or before the appellate authorities is mutuality is not at all an issue. Mutuality should not be considered for the purpose of giving deduction under Section 80P. Even if the society does not get covered under the mutuality principle, it is if the other conditions are fulfilled, it's very well eligible for deduction under Section 80P. Perhaps this satisfies the queries. Yeah. I am of the view it is a violation. Yes, because there are decisions which say that even passing a journal entry can lead to transfer of the transaction or accepting loan or deposit, and therefore it amounts to violation. When that's the situation, for the cooperative society, there is no exception. Yes, everybody is doing so far so good. Let's see. All three get hit by no 216 and SS. 216 and ST is not applicable when SS is applicable. No, it's a deposit. Okay, thank you so much. Thank you for your patient hearing. Yes. See, the heading or the title will not be the law. You will have to go by the strict interpretation of the provisions which are given in the section. When this section mandates that this is liable for penalty, penalty will be levied. Of course, under section 273, there is a specific provision which says that if a reasonable cause has been shown by the assessee, then a penalty need not be levied. So reasonable cause, perhaps you can show in the case of individual assessees, say that medical emergency or some exigencies are there. In the case of business, you may be able to say that there were some extreme business exigencies, so there was a violation once or twice. But if somebody does the violation every day in and out, I don't think you can call it as a reasonable cause for which you can get the exemption from the penalty. Thank you. Specific to Rule 60D, you have to see those provisions agricultural from the agriculture. It's if you have to make the payment. So yes, very much. You can argue.
Thank you, sir. On behalf of the Bangalore branch of SIRC of ICI, I thank CA Prakash Hegde for enlightening us about the income tax provisions applicable to the cooperative societies based on various judgments. Now I call upon CA Manjunath Allur, Treasurer of Bangalore branch, to present CA Prakash Hegde a memento as a token of appreciation. Now,